Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be taking a closer look at one of the most popular indicators in Forex trading, and that is none other than the stochastic oscillator. All right, but we are not just discussing any old stochastic settings, okay? We are diving deep into the best stochastic settings for the 4-hour chart. All right, so we're going to the 4-hour chart right away. We already have the stochastic oscillator loaded on our chart, as we can see right here. Okay, so if you are a trader who loves the precision of technical indicators and the versatility of the 4-hour time frame, then you will want to stick around for this. Okay, so let us get into it. And hey, if this video helps you out, make sure to hit that like button and don't forget to subscribe for more insights on boosting your trading game with effective strategies and tools. All right. Now, first things first, let us quickly break down what the stochastic oscillator actually is and why traders love using it. Essentially, the stochastic oscillator is a momentum indicator that compares a particular closing price of an asset to a range of its prices over a specific period. Okay, this is helpful because it gives us insights into overbought and oversold conditions in the market. Now, when the stochastic is at the top of its range, it signals that the asset might be overbought. As we can see here, when we have the stochastic above the 80 level, it signals that the asset might be overbought. And when we have the stochastic below the 20 level, it signals that the asset might be oversold. All right. This is why traders frequently use the stochastic oscillator to time their entries and exits, especially in Forex. Now, the beauty of the stochastic indicator is its flexibility across different time frames. But today, in this particular video, we are just going to be zoning in on the 4-hour chart, all right, which is a favorite among swing traders and day traders alike. Now, you might be wondering, why the 4-hour chart? Right? Well, the 4-hour time frame is popular because it is balanced. Okay, it is not too fast and not too slow, so it allows you to spot trends and reversals without the noise of shorter time frames, right? But it also doesn't require you to wait as long as you would on a daily chart. So with a 4-hour chart, you can get a good sense of medium-term price movements, all right, which makes it great for identifying potential entry and exit points with the stochastic oscillator. So if you're someone who doesn't want to be glued to the screen all day but still wants consistent signals, the 4-hour chart is perfect. And with the right stochastic settings, you can maximize its effectiveness. All right, let us get into the meat of it, which is the settings. Okay, so for the default settings, we can see that I'm just going to open this and I'm going to reset this. So as I reset it, you can see the default settings is 5 for percentage K, 3 for slowing, and 3 for percentage D. This is the default settings, right? But we are going to tweak these settings. Tweaking the settings can lead to more accurate signal. All right, it does not guarantee profit, or please take note of that. Even tweaking the settings does not guarantee profit still. Okay, but it can give you better signals for the 4 hours chart. All right, so for the 4 hours chart, a popular approach is to set the A popular approach is to set the look back period to around 21. So we're going to be changing this 5 to 21. This slows the stochastic down slightly, reducing the number of false signals you might get on this time frame. Okay, so a 21 period stochastic is a bit smoother and helps filter out the noise. All right, so try pairing that with a 5 and 3 for the slowing and smoothing period. So we can just change this to 5 and leave this at 3. Okay, This combination often works well for traders looking for cleaner signals in the medium term range of the 4-hour chart. So now we can see how this looks like, right? You can see how this looks like. Now with these settings, we can get more, signals that are tailored to the 4-hour chart, right? You can see that unlike how it was before, you can see that we have a limited number of times that the indicator is getting into the overbought oversold territory because it is aiming for higher probability trades, right? So we can see that at this point we had a sell signal. Of course, the signals remain the same. When you have the stochastic and the overbought territory, main line crosses below the signal line, and you have both of them crossing below the 80 level, you have a sell signal, all right? Even before the indicator crosses below the 80 level, once that bearish crossover has already happened, you have your sell signal, right? So we would have considered entering a sell right about here, and then stop loss could have been above the swing high, and then your take profit, you can just use the stochastic to also determine your take profit, right? You can wait for the main line to cross above the signal line and you exit your sell immediately, okay? Then now as for a buy trade, when you have a bullish crossover, there you have a buy signal, and then for your exit, you can just wait for the indicator to enter the overbought territory, and then when you have a bearish crossover, then you exit your buy trade, all right? Stop loss can be just below the swing low, okay? So we have talked about the settings that is best suited for the 4-hour chart, which is the 2153 settings, okay? So as a day trader or a swing trader, you might find these settings really effective, right? And even when using these settings and when you're using the stochastic oscillator, generally it's important that you combine it with other indicators, or other technical tools. Make sure that you use your trend lines, make sure that you make use of your horizontal support and resistance levels. These levels are very important, right? These are very important levels. These are levels that can give you potential entry and exit points. It reveals to you reversal points ahead of time. Okay, you can also combine this indicator with other indicators like the moving averages or the RSI or any other indicator of your choice, just for additional confirmation. All right, so now one of the keys here, when using the stochastic oscillator, one of the keys is patience, right? Wait for the crossover to be clear. When you have a crossover, wait for it to be clear and consider combining it with other indicators or chart patterns, all right? Candlestick patterns, chart patterns, they work well, okay? All right, now to wrap it all up, the stochastic oscillator is a fantastic tool for identifying overbought and oversold conditions on the 4-hour chart. And adjusting your settings can make it even more effective. Okay, you can try experimenting with settings like the 21, 5, and 3, or you can even decide to try you can decide to try a value of 30 here. Yes, you can try a value of 25, or you can try a value of 30. It depends on your trading style, and you can experiment with a couple of figures to find which one works best for you. Okay, so you can decide to just experiment with some values between 21 and 30. All right, if you found this video helpful, don't forget to hit that like button. Subscribe to the channel for more in-depth analysis and strategies like this. I'm always dropping content to help you navigate the Forex market with confidence. All right, so stay tuned and hit the bell to get notified when a new video goes live. Thanks for watching and happy trading.